8B looked at reducing balance depreciation, and what it did was it was similar to the first question, however it looked at it from a theoretical standpoint. And what you're asked, or what you were given, was this graph of the carrying value of a computer. And in case you weren't sure, it actually told you that they've used a reducing balance method of depreciation. So the way you could have told that, in case they didn't actually tell you that it was reducing balance, was to note that this depreciation seemed to be 20,000 in the first year, then it went down to 12,000, then it went down to about 7,000, and then about 3.5, and then about 3, and so on. So basically the amount of depreciation got less and less every year. And that must mean it's just the reducing balance method, because if it was straight line depreciation, we'd expect the line showing the carrying value would be perfectly linear. So what you needed to remember was that it's all about which, you said the question asked you to justify the method that they've used. Why would you use reducing balance for a computer? And it's all to do with the revenue generating pattern of the asset. So you're going to use straight line depreciation when the asset has the same revenue earning capacity over its useful life. So for example, a clothes rack, fixtures and fittings, that is equally adept at earning revenue in its first year as it is in its last year. It's an inanimate object, it just hangs things, it doesn't get any more or less efficient, doesn't have any moving parts. A display cabinet would be the same, an office chair would be the same. These are all things that are going to earn the same amount of revenue at the beginning as they will at the end. Contrast that to assets where they will earn more revenue in their early years than in their later years, and that would be common of things like cars, forklifts, and also machinery. So we've got a computer, and basically a computer would probably fit into the category of a car, forklift, or equipment. And the reason why is because it has moving parts. It's going to get less efficient as it gets older. It has wear and tear. It needs to get serviced. It breaks down. It's less efficient at earning revenue in its later years. So what we say is that when you've got an asset like that, you're going to use reducing balance depreciation. And that is what they've done in this question. So all you've been asked to do is justify it. And the justification is, well, let's go back to the shop fittings. If we expect that to generate the same amount of revenue every year, well, what we'd expect is that we should charge or match the exact same amount of depreciation every year. So revenue and depreciation was the same in year 1, year 2, and year 3. However, if we think something will earn less revenue as it gets older, so take a car for example, it's going to earn $25,000 of revenue in year 1, then only 17.5 in year 2, and then only 10 in year 3. Well, we should therefore charge less depreciation. So if this car is going to earn less revenue, well, accounting theory in terms of the reporting period principle says you should charge less depreciation. So how would we answer this question? Well, it was all about justify. What does that mean? Well, we want to say, why should you use reducing balance? You should use it because the revenue earning capacity of a computer means that it's likely to earn more revenue in its early years than its later years. And then secondly, well, that must mean we should charge a higher expense at the beginning of the asset's early life and charge less as it gets older. And the reason we're doing this is that this will result in a more accurate profit figure. Looking at the marks and how people did, 31% of the state got 0, 31% got 0, 38% got 1, and 31% got 2. So reasonably well answered. This was towards the end of the paper, so a lot of students wouldn't have got to this or might have left it. Looking at the examiner's comments, it was all about, it says students were expected to respond with a comment on the revenue earning pattern of a computer. Now, I'm not sure how you were taught. A lot of textbooks and so on refer to moving parts. I don't actually know what that means. If you talk about an asset with moving parts, I mean, a lot of assets have moving parts. An office chair has moving parts in it, but it doesn't mean that it should be, it's going to earn less revenue. So really, I think you're probably better off focusing not on moving parts, but more on revenue earning pattern. So that's what you need to talk about. If you talk about something should be depreciated using reducing balance because it's got moving parts, that's not really why. The reason why we use reducing balance is because it earns less revenue as it gets older. So we want to make sure we mention its revenue earning pattern. Other students wrote detailed notes on how the straight line method is different, which didn't necessarily lose you marks, but it didn't really get to the point. The point was why use reducing balance, not why should you use straight line or why shouldn't you use straight line.